Good morning, dear shareholders, dear shareholder representatives. As Chairman of the Supervisory Board, I would like to open the Annual General Meeting 2025 of grenke AG. On behalf of the Board of Directors and on behalf of my colleagues on the Supervisory Board, I would like to welcome our shareholders, the shareholders' representatives, and representatives of the press. Our guests from Markgraf Ludwig Gymnasium Baden-Baden, and all those who are following our annual general meeting online. In addition to myself, the following members of the Supervisory Board are present in person: Norbert Freisleben, Moritz Grenke, Nils Gröber, Dr. Liane Mitic, and Manfred Pionke. From the Board of Directors, I would like to welcome the Chairman of this Board, Dr. Sebastian Hirsch, Gilles Christ, and Dr. Martin Pahl. Ms. Sonntag, Notary Public, is also present to prepare the notarial minutes of the Annual General Meeting, as is Dr. Böhmer as an additional Notary Public. To my right here, my name is Jens Rönsberg. I'm Chairman of the Supervisory Board of grenke AG, and today I'm guiding you through this AGM as Chairman of the meeting. Before I start, please allow me to begin by saying a few words. The day after the historic election of our Chancellor and at the beginning of the conclave, we meet here and we see that the world economics is really in a difficult situation, both in economic as well as in political terms. On the one hand, we see signs of stabilizations after the crisis years of the past, starting with the corona pandemic. For example, on the energy markets, we see a stabilization. On the other hand, there are still considerable and in some cases growing uncertainties. For example, due to geopolitical conflicts, Middle East, Ukraine, India, Pakistan. The tariff policy of the new US government, which seems somewhat erratic, the generally weakening economic development, and last but not least, the inflation trend and the corresponding monetary policy reactions of the central banks. The picture for Germany, in my view, is rather mixed. Although inflation has weakened recently, it remains high by historical standards. Consumer sentiment is rather subdued, and companies' willingness to invest is developing only hesitantly. At the same time, however, there's still a considerable need for investment in the areas of digitalization and the energy transition, which should provide impetus in the mid-term. But it's difficult to predict at any rate. The picture is similar in the key markets in the other countries in which we operate. The importance of reliable financing partners is particularly evident in this environment. The leasing industry is benefiting from the fact that companies are increasingly focusing on flexible and predictable solutions. Our focus on financing small investment volumes for small and mid-sized companies allows us to spread risks very widely and to diversify accordingly. And the constant demand for sustainable financing solutions opens up new potentials for us. Your company last year, despite the challenging environment, has proved that it continues to be increasingly able to develop and market leasing solutions worldwide. We are present in more than 31 countries in the world. You mustn't forget that. We thus utilize the existing demand potential. This is reflected in the historic growth in new business to over 3 billion, which is truly historic. We were also able to maintain or even increase our market shares in the relevant markets. This speaks in favor of our strategic orientation and the close cooperation with our partners and customers in Europe and the world at large. At the same time, however, we had to realize that the aforementioned uncertainties and the current phase of economic weakness led to a significant increase in insolvencies, not only in Germany, but all over the world, also including our customers, which was reflected in the higher loss ratio. We are aware that the situation remains volatile and uncertain. Reliable risk management, solid and diversified refinancing, and clear strategic decisions are and will remain crucial. We will therefore continue to act with a sense of proportion, but also with the aim of consistently using opportunities. I would like to thank you for your confidence in our company and look forward to a constructive annual general meeting. Thank you very much. Ladies and gentlemen, before entering to the agenda, we have to complete a few formalities required by the German Stock Corporation Act. The convening of the AGM was announced in due form and time by publication of in the Federal Gazette on March 26, 2025, together with the agenda and the management's proposed resolutions. I therefore declare that today's AGM was duly convened in due time in accordance with the law and the Articles of Association. Proof of publication is available to the notary and will be attached by her to the minutes to be prepared. Agenda. The agenda, with the wording of the respective resolutions proposed by the management, is available on the company's website. And in the interest of sustainability, you can download the agenda, the proposed resolutions and other documents at the AGM digitally, again this year, by our information terminals opposite outside in the entry hall. I've confirmed that the terminals work perfectly. It's very user-friendly and you can read everything really well. The documents to be made available for the AGM in accordance with the law and the Articles of Association could and can be viewed on the grenke website in accordance with Section 124a. German Stock Corporation Act. All documents are also available digitally on our information terminals here at the meeting, outside at the information terminals. No requests for supplements pursuant to Section 122 German Stock Corporation Act were not received within this deadlines. Motions on the agenda or counter motions pursuant to Sections 126 and 127 were not received within the statutory period. The notifications required by Section 125 of the German Stock Corporation Act were sent by the Board of Directors in due time and in the manner prescribed by law. Ladies and gentlemen, the proceedings of the AGM will also be broadcast by loudspeakers in the foyers throughout the Congress Center. However, only this room belongs to the meeting area in which votes can be cast. I designate this room and the entrance lobby up to the shareholder registration desk as the attendance area. Shareholders and shareholder representatives who leave the meeting room but remain in the attendance area generally do not reduce the attendance count, despite the fact that voting is only possible here in the meeting room. Shareholders and shareholders' representatives who leave the attendance area and do not grant a proxy reduce the attendance count. In principle, your personal presence here in the meeting room on the second floor is necessary during the vote if you wish to vote against or abstain from voting. I would therefore ask you not to leave the meeting room immediately before the vote and during the voting process, if possible. This year, voting will again be conducted in digital form. We are using tablets for this purpose, which you can use to cast your votes. To authenticate yourself for voting, all you need is your admission ticket, which has a corresponding barcode that can be read by the tablets, regardless of whether you have a physical admission ticket or an admission ticket in digital form. I will explain the details of the voting procedure immediately before the votes are cast. At this point, I would like to limit myself to the following information on the granting of proxies. If you leave the AGM early but do not wish to forfeit your voting rights, you can appoint a proxy. In this case, you can grant proxy rights to another shareholder present, or a shareholder representative, or to the proxies selected by our company for this purpose. This proxy must be in text form to be effective, and to simplify matters, you can use the proxy form prepared by the company. If you do not have a proxy form to hand, please contact the exit control. If you complete the relevant form in full, the required text form is automatically complied with. Please present the form at the exit control so that your votes can be assigned to the person you have selected in the list of participants. Please hand the admission ticket with the barcode to the person you have authorized so that they can exercise their voting rights on your behalf. If it is not possible for you to hand it over for technical reasons, for example, please contact the staff at the exit point who will be happy to assist you. I would like to point out that when authorizing the proxies of our companies, instructions must always be issued. Without instructions, the authorization is invalid. The company proxies are obliged to vote in accordance with your instructions. If you wish to authorize the company's proxies, please hand in your completed proxy form at the exit checkpoint, and if you require assistance, please contact the staff there. The company has appointed Ms. Tanja Ludwig from Baden-Baden and Daniela Maisch from Baden-Baden as proxies for today's AGM, who you can authorize until the start of voting. And I will refer to this again when explaining the voting procedure. The vote on the individual items on the agenda follow the so-called subtraction method, which I explain to you in more detail later, immediately before the vote. However, I expressly reserve the right at this point to determine a different type of vote if I, as a chair of the meeting, deem this to be appropriate. Once again, we will be broadcasting the annual general meeting live on the internet in full length in audio and video. We'll also make the annual general meeting available as a recording on our website, but only until the end of the presentation by the Board of Directors. I would also like to point out that recordings will also be made for press purposes. All participants are kindly requested not to make any video or audio recordings, and please mute your cell phones in the meeting room. The attendance register is currently being prepared. It will be available for inspection at the speaker's desk at the latest before the first vote. I will then also announce the attendance count. Changes to the participants are recorded in addenda, which are also available for inspection at the speaker's desk. I would ask those shareholders who leave the annual general meeting early to sign out at the exit checkpoint so that the attendance register can be corrected. The discussion following the report of the Board of Directors will take the form of a general debate, and in the interest of a speedy conduct of our annual general meeting, I would ask those shareholders and shareholders' representatives who wish to speak to submit their comments and questions on all items on the agenda in one single presentation. If you wish to take the floor, please go to the speaker's table here at the front, to my left and your right, and fill in a form with your name, and please present your admission ticket for that. If you wish to speak on a point of order and make a procedural motion, please also complete the form here and indicate the subject of your procedural motion with a keyword when you request the floor, so that I can decide appropriately whether and when I should give you the floor. And please make your comments only via the microphone at the lectern set up here, which you see to your right, so that it can be easily heard and understood everywhere. Ladies and gentlemen, Before we move to the agenda, I would like to point out that there have been changes to the composition of the Board of Directors since the last annual general meeting. The Supervisory Board has appointed Dr. Martin Pahl as a member of the Board of Directors with effect from the 1st of July 2024. Dr. Pahl will contribute his expertise as Chief Financial Officer to the Board of Directors. Dr. Pahl was able to introduce himself during last year's AGM. Ms. Isabel Rösler has left grenke AG at her own request on December 31st, 2024. And the following change has been made to the Supervisory Board since the end of last year's annual general meeting. Dr. Konstantin Mettenheimer resigned from the Supervisory Board at the end of last year's annual general meeting. And Manfred Björnke was newly elected to the Supervisory Board. I would now like to use today's annual general meeting to introduce you, dear shareholders, Isabel Tufet, whom the Supervisory Board, as announced in the press release dated on April 2nd, has appointed with effect from September 1st, 2025, as a member of the Board of Directors. Ms. Tufet will contribute her expertise as Chief Operating Officer. And I'm delighted that we have been able to recruit Ms. Tufet for grenke AG. Ms. Tufet, may I ask you to briefly introduce yourself? Good morning. I'm Isabel Tufet. It's easy to remember Isabel. That's easy. I'm Spanish, a strange Spanish woman because I'm from Catalonia. My mother is from South America and I spent all my life abroad. The last 20 years in Germany, by the way. But I can't get rid of my accent. I try hard, but it doesn't work. I would like to spend a couple of minutes to report on my career so far, what I've done until now, and the second part, why I've opted for grenke and why I'm the perfect match for them and they for me. The last years, I worked for Santander, that's a Spanish bank. I worked for Santander in Germany, and I started with technology and operational risk management that referred to Basel II and III. They didn't have it, and I had to build up this, and immediately after that, I was asked whether I could look into financial crime, because they had problems with BaFin and money laundering. So AML was the topic. So I was asked to restructure the system and implement the systems. And then some years later, I was asked to take over the back offices for the consumer operations, roughly 1,000 people. I was responsible for, they did complaints management, call center, payment services, everything you might imagine. And then I was asked to restructure this company, to improve it, to make it more profitable, to digitize, automate it, and transform this company. If you look at this, you can see that I've done many different things. And they're very different, but the common factor was I was always rolled in, so to speak, to start something from scratch, to build it up, and to transform something. And that is why I had my last post as Chief Transformation Officer, to transform the bank, to digitize it, to adapt processes and modify the organization. And that's my current position until September. Why grenke AG? Well, quite frankly, it was a cold call, so to speak. I was asked several times over and over, said, I'm Spanish. I would never leave Santander unless I find someone where it really ignites, so to speak. And I had several contacts, several requests for different jobs, but I did a due diligence when I was asked to join grenke, and I was passionate about the company right away. I looked at all that happened, and I thought if they're still this strong position and still profitable, that's a winner's team for sure. And then when I met the board of directors and the supervisory board, this was confirmed, and there was this spark. And I said, yes, I want to be part of this journey. I want to transform grenke. And I think I can bring in my expertise. I love a challenge. I love a challenge for sure. And I'm sure that I will be able to fulfill my dreams to transform the company and be part of a winner's team. Thank you, Mrs. Tufet. Ladies and gentlemen, before we move on to the agenda, I would like to briefly inform you that a buffet will be available for you on the first floor as of 12:30. The annual general meeting will also be broadcast via loudspeakers in this area. However, you can only exercise your shareholders' rights in this meeting room, as I've said before. Ladies and gentlemen, we now come to the agenda, which you all know. The agenda with the proposed resolutions was published in due time in the invitation to the meeting in the Federal Gazette and is also available on the company's website. Let us now begin with item 1 on the agenda, which deals with the financial statements and reports to be presented. However, I would now also call up all the other items on the agenda, i.e. agenda items 2 to 10. Item 1 on the agenda, presentation of the adopted annual financial statements of grenke AG and the approved consolidated financial statements as of December 31st, 2024, the combined management report of grenke AG and the consolidated group, the report of the supervisory board, as well as the explanatory report of the board of directors on the disclosures pursuant to sections 289A and 315A of the German Commercial Code in all cases for the 2024 financial years. And I would like to state the following. Pursuant to section 175(2), the aforementioned documents and the management's proposals for the appropriation of net profit were available for inspection and retrieval on the grenke AG from the day on which the annual general meeting was convened. These documents are also available today at the AGM in digital form via our information terminals for all participants right outside of this meeting hall. The annual financial statement of grenke AG and the group, as well as the combined management report, have been issued with an unqualified auditor's opinion. The annual financial statements of grenke AG and the group, as well as the combined management report, were distributed to each member of the supervisory board, discussed in the audit committee's meeting, and discussed in detail at this year's balance sheet meeting of the supervisory board in the presence of the auditors. The Supervisory Board conducted its own review of the annual financial statements of grenke AG and the group prepared by the Board of Directors and also the combined management report. And the Supervisory Board also reviewed the non-financial group reporting, which was also subject to a voluntary external audit by the auditor. The audits did not give rise to any objections, which means that the annual financial statements of grenke AG prepared by the Board of Directors were approved by the Supervisory Board at the balance sheet meeting. This also applies to the consolidated financial statements, which were approved by the Supervisory Board. In addition to my comments, I would like to refer you to the report of the Supervisory Board, which is also available for viewing here today as part of the 2024 annual report in digital form via our information terminals. A resolution of the annual general meeting is not required for this item of the agenda. I would now like to ask the Board of Directors to explain the annual financial statement and report on the company's performance in the past financial year. The Board will also discuss our company's share buyback program, which was completed in September of last year. And I would like to give the floor first to the Chairman of the Board of Directors, Dr. Hirsch, and right after that to Chief Financial Officer, Dr. Pahl.
Dear shareholders, dear Ms. Grenke, dear Roland, dear Oliver, dear guests, welcome to this year's annual general meeting of Grenke AG. It is also my great pleasure to welcome today the students of the Markgraf Ludwig Gymnasium as guests today. I think it's really great that you have followed our invitation. Last year we had a little presentation at our company. It's great to see that you're obviously interested in business and you're invested in the Grenke share as well. And I'm very glad that we can make a contribution today helping to promote share culture in Germany. Now, ladies and gentlemen, of course, today we will focus primarily on the past financial year, 2024, and we'll also take a look into the future. I will come to that in a moment. But first, I would like to emphasize that today is a very special AGM, namely the 25th Annual General Meeting of Grenke AG. Your Grenke AG, dear shareholders. A few weeks ago, on the 4th of April, we celebrated our 25th anniversary on the stock exchange at the Frankfurt Stock Exchange and symbolically rang the bell for a second time. With this important action, we not only attracted attention on the trading floor, but also deliberately underlined our commitment to the stock exchange listing of your Grenke AG. Despite all due humility in view of our current share price, I say this very deliberately and very clearly. We can be proud of our achievements in these 25 years of company history, but we also want to live up to our responsibilities and use the opportunities presented to us in coming years, and we have positioned ourselves specifically to do so. I can assure you that I personally am not at all happy with our current stock market valuation, because there is more to your company and more to us. And this makes it all the more important that we remain true to ourselves and consistently follow our successful path, as we have always done. If you want to reach a goal that is far away, you have to take many small steps. Helmut Schmidt said that. So 25 years ago, in 2000, Wolfgang Grenke took the plunge into the capital market with 150 employees, courageous, determined, and with a business model that was focused on a clear goal, which remains the same today, growth. At the time, we were active in Germany, Austria, France, and Switzerland. New business in 2000 amounted to 178 million euros. Since then, we have continuously rolled out our business model, strengthened our presence in core markets, tapped into new growth markets, and thereby significantly increased new business. Today, we no longer express our new business figures in millions, but in billions. Until the coronavirus crisis, ladies and gentlemen, this decades-long success story had continued almost uninterrupted. The only minor setback came in 2009 as a result of the financial crisis, but we were able to recover quickly. It was not until the COVID-19 pandemic hit in 2020 that we suffered a severe and unfortunately serious setback. On top of the pandemic, there was also a massive short-seller attack. Taken together, these two factors cost us 4 years of growth. We can say that today with hindsight, and you can see it very clearly in this chart. But we have fought our way back out of this valley, ladies and gentlemen. And what is the best proof that we have now achieved the turnaround after the pandemic? Well, in the past financial year, we generated over 3 billion euros in new business for the first time, the strongest result in our company's 40-year history. This achievement is all the more remarkable given that the economic environment was anything but easy. It has been difficult since a couple of years, and it remains complex. I would like to take this opportunity to thank all of our nearly 2,500 employees for their hard work. It is thanks to their performance and commitment that we have reached this milestone. Dear colleagues, thank you very much. I would also like to take this opportunity to express my gratitude to my two colleagues on the board of directors, Gilles Christ and Dr. Martin Paul. Thank you for your dedicated support and trusting cooperation over the past year. Again, Gilles and Martin, thank you so much. And I would also like to say thank you to our supervisory board for the vigilant and open-minded criticism and our joint view forward. So thank you very much, colleagues. For the future of your Grenke AG, dear shareholders, and for the value of Grenke, the most important thing from now on forward is to keep growing and expanding our business volume. And it is important that we continuously increase our market share. After all, it is precisely this new business that secures our future earnings. Incidentally, this chart also provides empirical evidence that we have grown by an average of 12% per year since our IPO. Let us assume, just to spark your imagination, if we were to grow only 10% per year from today onwards, this figure would be 5 billion in new business in 2030. And I will explain why this understanding of growth is so important for assessing what I believe to be our excellent prospects for the future in the moment. First, however, I must point out that we are in the middle of a year that has been anything but quiet so far. We are all feeling the effects of profound upheaval, politically, geopolitically, and economically. The world seems to be in turmoil. In addition to the never-ending war in Ukraine, or so it seems, the conflict in the Middle East, and the effects of climate change, Donald Trump's return to the White House has been causing uncertainty for weeks that could hardly be greater. The scope of the global trade conflict, which is shaking stock exchanges and capital markets and putting supply chains under renewed pressure, can hardly be grasped in economic terms yet. Fortunately, we at Grenke have not yet felt any direct effects from the current macroeconomic disruptions and challenges, and we're doing everything we can to ensure that this remains the case. But reliable planning, and we need to be honest here, is hardly possible under these circumstances. We remain vigilant more than ever. We have already done everything in our power. Our liquidity management is solid and has stood the test of time. We also consistently focus on diversification as broadly as possible and our data-driven risk management. So my conclusion is we are well positioned. Not just resilient. One thing is certainly true now. Despite all the short-term turmoil, no matter how erratic, we must not lose sight of our long-term focus. This is not the time to look for shortcuts. We must consistently continue on the right path. And this attitude, well-prepared, vigilant, quick and capable of acting, has shaped our entire thinking and actions at Grenke for decades. Today's summary also includes the fact that Grenke has undergone fundamental changes over the past 5 years, because Grenke had to change. We had to change. We are now in the final phase of this truly profound transformation, economically, structurally, and culturally. We're now working flat out, not only to return to our former efficiency, but even more so to swing into a new phase of strength. The focus is on consolidation and a new beginning. Above all, this means that for more than 3 years, we have been consistently reducing the legacy issues caused by unbridled growth in the past. We have not sugar-coated things, but tackled them at their roots in order to consolidate properly. Firstly, compliance issues. These have now been almost completely resolved. Secondly, the lack of digitalization. To this end, we have launched our major IT project, which is not only on schedule, but also within budget. Looking back, I would describe the past 5 years as an evolution, even an accelerated evolution. We did what had to be done, and we did it as quickly as necessary, because we significantly increased the pace of change. Last year, we also paved the way for two further important milestones that represent new paths and a new beginning. Firstly, the sale of our chronically loss-making factoring business. We were able to retain jobs, which was an important concern for the board of directors. We will now focus fully on our core leasing business. The second milestone was the preparation of our strategic alliance in Italy with the country's largest bank, Intesa Sanpaolo. Both companies will benefit from joint market development in the future. In addition to the sales network, this will give us access to another source of refinancing for our third largest market. My colleague, Dr. Martin Pahl, will explain the details of both projects in a moment. All in all, grenke is in a better strategic position today than it has been for a long time. Growth and increased efficiency, ladies and gentlemen, that is the rule of thumb for our profits. To become more attractive to our investors and to you, we are also working hard to further reduce our costs in order to increase profitability. And that is important, and we need to do that in the long term, not in the short term, not by foregoing new business. Our answer is not to slow down growth, because our new business today is the source and foundation of our profits tomorrow and the day after that. We have made every effort in recent years to put ourselves in exactly this starting position. Now, not everyone may have recognized it, but we have actually expanded our pole position. And although I am confident in our growth course, the volume growth of our business, which recently exceeded 3 billion euros after all, is not the only decisive factor. What is decisive is the triad of our success factors and value drivers: income, costs, and risks. That may look trivial, ladies and gentlemen, and in our day-to-day business we actually manage our group using a whole host of key figures which we cannot cover here today. But we ourselves focus on these three factors in our day-to-day business, and this is why I would like to take a look at the engine room which describes these three levers, and I'm sure that you will be able to better understand them. The structure of this chart may be one that you're familiar with from our income statement. Income is shown at the top, followed by costs and risks. And we actually restructured our income statement to reflect this last year. You will also find another key figure in this overview, contribution margin 2, which aggregates our future income from new business in a single key figure, adjusted for expected risk provisions, and another one, the so-called cost-income ratio, the ratio of costs to income, and the loss ratio, which explicitly expresses the risk result in relation to the total leasing volume. The contributions of these three levers to our value creation vary greatly over the course of a typical 4-year leasing contract and the portfolio. And I would like to explain this in more detail. Let's start with our income, or to put it bluntly, what do we actually earn from a leasing contract? This is precisely what our operating income expresses. Essentially, it covers all cash flows that we generate directly from our leasing business. This includes interest income from lease payments and commission-like income from our services, such as our Protect business. This offers lessees protection for the leased assets if they do not wish to insure them themselves. It is important to note that this income already includes all expenses for the acquisition of the leased assets and for refinancing over the term, that is, interest expenses. However, as interest income and interest expenses are based on the leasing volume, which declines over the term of the contract, operating income also declines slightly over the term. This is because, similar to a loan, our customers also repay the initial investment amount with each leasing payment. Essentially, we are dealing with a continuous, steady inflow of income. Now, our operating costs over the entire 4 years are also important. That's part of the game. And I can promise you that the picture here is quite different. Of course, we need a sales and operating infrastructure. Without it, we would not be able to generate any business. However, we have to cover the majority of our costs at the beginning of a leasing contract. That is for sales, support for our dealer network, and contract decisions, as well as customer onboarding. After all, we want and need to know who are we buying the assets from, what are they, and who is our lessee. The much smaller portion of costs is then incurred during the term of the contract. This is why the cost curve is so completely different from the income curve shown above. And this makes it clear that once the contract is in our system, the ongoing costs are relatively low. Interim conclusion: although income declines over the course of a lease contract due to volume, costs fall faster and much more sharply. Let us now complete our value drivers. When we conclude a new contract, we consciously take risks. After all, above all, the risk that lessees will pay late in some cases, or perhaps not at all. Ladies and gentlemen, that is the nature of our business, taking such risks and calculating them as accurately as possible in advance. Thanks to our decades of experience in small-ticket leasing, we have a very reliable idea of the risks we're taking under normal conditions. We not only make our decisions very quickly, but always on the basis of the most accurate information available. Having said that, the actual payment behavior of our customers only becomes apparent during the 4-year contract period. And this is also part of the truth and our business. Extraordinary circumstances can extremely quickly affect the economic conditions of our customers. And this is exactly what happened last year when, for example, the repayment of COVID-19 support loans led to a massive wave of insolvencies in some of our core markets. It was not so much the magnitude of this wave that took us by surprise, but rather its speed and its associated impact. We have adjusted our risk provisioning expectations for the current and coming financial year accordingly. But let's get back to the engine room, because in the long term, risk provisioning is in general quite easy to estimate, even if there are periodic fluctuations. At 1.5 or 1.6% of the volume of our leased assets, we have a reliable and robust indicator. As a result, the estimated average expense for risk provisions also decreases over the contract term. Now, let's put these 3 elements, income, cost, and risk, together to form the big picture. The income will flow steadily over the next 4 years. We've seen that, but we also saw that the cost situation is quite different. It is absolutely intentional, ladies and gentlemen, as part of our business model, that we make financial investments upfront. We acquire and pay for any assets immediately so that we can then make them available to our customers for commercial use. Accordingly, the majority of our costs arise in connection with this acquisition process, both causally and temporally. Now, why am I explaining this in such detail? For 2 reasons. Firstly, this is not a single individual case, but it will help you understand the value that already exists in your company today, namely the leasing contracts that are already in place, and these are over 1 million. I will come back to that in a minute. Secondly, it allows you to assess the strength and leverage of our new business. The more new business we generate, the more our earnings will grow in the future. This is quite predictable, and this predictability is one of the great strengths of our business model. I hope I have succeeded in convincing you of the importance of our growth strategy. This consistent growth course increases the strength and nourishes the substance of our company. Let me illustrate this with another chart. Not only has the new business grown enormously in recent years, you can see that looking at the two bars at the lower part of the slide, but the total amount of outstanding lease payments from our customers has also risen sharply, as shown by the yellow line, based on the existing portfolio of 1 million contracts mentioned above. This is a reflection of the earnings power that will fuel future profits. These outstanding lease payments represent future profits, pre-tax profits, with a total volume of currently over 500 million euros. And costs and risks have already been taken into account. The total net asset value of our company, that is your company, dear shareholders, currently amounts to around 1.5 billion euros. This consists of your equity and the aforementioned outstanding profits after taxes and related only to the existing business. And now I have provided the quantitative justification for my current dissatisfaction with our share price. The calculated net asset value per share alone is more than twice as high as our current share price. In other words, the current share price does not reflect grenke's enormous potential, neither its intrinsic value nor its future prospects. And our greatest potential still lies ahead of us, with the consistent implementation of our growth strategy. Now, ladies and gentlemen, you may be asking yourselves, where does Hirsch get this optimism from? Well, I can tell you exactly, because our market, the market itself is intact, and because we're only just beginning to fully exploit our opportunities and implement our strategy. We're active in more than 30 countries. We enable a broad range of investments, primarily up to 50,000 euros. You know that. We call this segment small ticket leasing. We have over 650,000 customers, and that makes us the international market leader. The market potential for leasing, especially small ticket leasing, and thus for us, remains enormous in the long run. We're currently seeing that our customers are investing. The demand for our solutions remains high because the need to invest remains high. In my opinion, and that of associations and research institutes, many companies will have to actively defend their competitiveness in the coming years, despite and indeed because of the macroeconomic disruptions. To do so, they will have to invest heavily in digitalization and infrastructure, just like we do. For some of these investments, leasing is the smart solution. It is a solution that creates financial leeway. Dear shareholders, of course, we know that we have not yet reached our goals in every area. Our cost-income ratio and our return on equity, two key figures for you, our investors, are both below the level we're aiming for. But there is a reason for this. The reason is the investments we have made in recent years in the people at grenke and in digitalizations. In other words, in our future. In the past 3 years, we have been preparing the ground, and we expect to reap the rewards in the coming years. Thanks to our strong and profitable growth in new business, earnings will more than offset our expected increase in costs. This was already apparent last year, and this trend will continue, as we can see here. The further we project into the future, the greater the gap between the two lines, between operating income and costs. And this is also a clear part of our business model and our strategy. And that, dear shareholders, brings me to my vision for the future of grenke. My first vision is that, in principle, any investment can be realized through a lease contract, quickly and easily, especially in the small ticket segment, which is our specialty. And my second vision is that for our customers and the market, we at grenke want to make leasing as easy and straightforward as online shopping. These two visions encapsulate grenke's enormous potential in Germany, in Europe, and worldwide. And that is why we'll continue to gear our entire organization and infrastructure towards growth in new business and even greater profitability in terms of personnel, processes, and technology. We will achieve the desired increase in efficiency by consistently focusing on our customers and persistently implementing the following points: through automation and seamless processes, as simple as possible. Through the targeted use of modern IT and also artificial intelligence, yes, fast and efficient, and through the optimization of our internal organizational structures, only what is absolutely necessary. In this way, we are establishing leasing as a matter of course and as the most normal means of realizing investments. Leasing as an intuitive solution. At the same time, we will generate growth, further expand our assets, and also improve profits in the foreseeable future in a targeted manner and almost automatically, thanks to the mechanism outlined above. Ladies and gentlemen, finally, I would like to explain our outlook for the current financial year based on our value drivers. This essentially consists corridors and targets. Let's start with new business. It is expected to grow to between 3.2 and 3.4 billion euros. We are keeping an eye on profitability at the same time and are aiming for a CM2 margin of over 16.5%. We intend to keep our costs under control. Accordingly, our cost-income ratio should remain below 60%. And thirdly, we expect a loss ratio of around 1.6% for the full year, which is only slightly above our long-term average. Ladies and gentlemen, if we achieve all of these targets, we will also achieve our most important goal, which is our top priority, a profit of 71 to 81 million euros. Today, you, our valued shareholders, will first decide on the appropriation of earnings for the past financial year, and I owe you a brief overview of this. The Supervisory Board and Board of Directors, you will have read it, are proposing to the Annual General Meeting today that a dividend of 40 € per dividend entitled share be distributed. This amount corresponds to around 25% of consolidated net income and is in line with our long-term dividend policy. We invest in growth and at the same time give you a reliable share in the company's success. Dear shareholders, some of you are already familiar with my reverence for Johann Wolfgang von Goethe. He said, "It is not enough to know, one must also apply. It is not enough to want, one must also do." And this is truly timeless advice from Goethe. This is precisely the standard we set ourselves and live by at grenke. And we naturally refers to all our employees and also in particular the Board of Directors, which will be complete again on the 1st of September with the arrival of Isabel Tuffet. On behalf of my fellow board members, I would like to express our conviction that with Isabel we are gaining someone who not only knows and wants, but also can and does. Welcome, Isabel. Let me summarize the current situation and outlook for grenke as follows. We are growing we are profitable, we are focused, and we are confident that we are on the right path. It may not be the easiest path, but it is the right one. Our strategic focus is on carefully balancing growth, risk, and efficiency. This is how we ensure lasting and sustainable success. The world remains volatile, but we keep moving, and we're ready to react quickly when it matters. Trust is not something we demand. It is something we earn, day after day, time and time again. We're moving forward with discipline, with ambition, and with a clear plan to manage grenke profitably now and in the long term, and to make the value of our company visible. We have a strong team, a viable business model, and an international network. And we're convinced that leasing is and will remain a future-proof tool. And that is why I'm looking forward to what lies ahead, to the next 25 years. On behalf of the Board of Directors, I would like to thank you, dear shareholders. I would expressly like to thank you for your trust, but also for your confidence and conviction in the grenke share. And with that, I would now like to hand over to Dr. Martin Pahle, our new Chief Financial Officer, for the first time, who will review the past financial year for you based on the figures. So thank you very much for your attention. Well, dear shareholders, ladies and gentlemen, distinguished guests, I would also like to warmly welcome you to this year's AGM of grenke AG. Now that my colleague Dr. Sebastian Hirsch has given you his presentation, I would now like to provide you with some more details on the financial performance of our company in the 2024 financial year. Ladies and gentlemen, 2024 was a year of ups and downs for grenke. We operated and continue to operate in a highly volatile market environment, which poses challenges for reliable planning. Unfortunately, this was also reflected in the necessary adjustment of our profit forecast last year. At the same time, our economic momentum remains unbroken. At the end of the 2024 financial year, we increased our leasing volume by over 700 million euros and exceeded the 10 billion mark for the first time. This volume of leased assets is the foundation of our future earnings and thus forms a solid basis for value growth. Despite the considerable uncertainties in the market, demand for our financing products and services remained unabated. Accordingly, we had over 1.1 million current leasing contracts with almost 700,000 customers by the end of the year, and our international growth also contributed substantially to this. In the Netherlands, we concluded new business worth over 100 million euros for the first time. This means that 7 countries have now exceeded this threshold, and we have laid the foundation for further growth in our future markets, such as with the opening of our 5th branch in North America in Chicago. At the same time, we also faced major challenges in the 2024 financial year. While we continue to see strong demand for our financing solutions for small and medium-sized enterprises, despite the high level of uncertainty on the markets, the number of corporate insolvencies rose dramatically, particularly in the second half of 2024. Our customers in Spain, France, and Germany were particularly affected by this. This rapid increase hit us especially hard because we still had a historically low ratio of impaired leasing contracts at the beginning of the year. As a result, this development was reflected in a significant increase in the loss ratio, claims settlement, and risk provisioning. While the number of contracts that recently became defective did not surprise us, It was the high speed at which this was achieved that did. Accordingly, in the autumn of 2024, we had to lower our profit forecast for the last financial year in view of the significantly faster than expected increase in claim settlement and risk provisioning. And I can only agree with my colleague Dr. Hirsch on this point. We have carefully analyzed the situation and taken measures to be better prepared for such cases in the future. Among other things, we have significantly tightened our monitoring processes and selectively adjusted our partner network. Ladies and gentlemen, let us now take a look at the income statement for the past year. In the 2024 financial year, we were able to increase our operating income, which comprises payments from our lessees and income from service and new business, by 53 million euros to 576 million. This already reflects the earning power of our significantly expanded leasing portfolio. At the same time, our costs, which primarily comprise personnel, administration, sales and depreciation, rose by 32 million euros to 341 million. We therefore see an increase of 21 million to 235 million euros in our operating result before claim settlement and risk provisioning. As I have already explained, the item for claim settlement and risk provisioning rose much more sharply than we had anticipated in the past year. At roughly 131 million, this figure was around 40 million higher than in the previous year and had a significant impact on our consolidated net income. After other items and taxes, this figure was within the range of our adjusted forecast, but significantly below the figure we had forecast at the beginning of the year. But let us now look ahead to future income and profitability. Here we can see that we were able to exceed an important milestone for the first time in the 2024 financial year. With 3.1 billion in new business, we not only broke through the 3 billion barrier, but also returned to our old growth path from 2019, 4 years after the outbreak of the coronavirus pandemic. Not only is the volume of new business positive, but so too is the very solid margin at which it was concluded. In 2024, we achieved a contribution margin 2 of 519 million euros, which reflects the profitability of our new business and corresponds to a contribution margin of 17%. At the same time, the margin already factors in higher expected claims. We have thus laid another important foundation for our future profitability. As Dr. Hirsch already explained, we are generally focusing on the 3 strategic levers of income, costs and risk management. This means that we will increase our future earnings power through further new business growth, improve our profitability through consolidation and cost efficiency, and keep a close eye on our risk development. We have already taken 2 important steps in this direction in the current financial year. The first is the sale of our factoring business, a loss maker for years, to Taylor AG, a young financial services provider for SMEs in Switzerland, which was contractually agreed in spring this year. The sale, which is essentially earnings neutral, will enable us to consolidate our business, divest the loss-making segment and focus on our core strength, the profitable leasing business. The second major step is the strategic partnership with Italy's largest bank, Intesa Sanpaolo. Intesa Sanpaolo has over 2,000 branches and a customer base of more than 1.2 million corporate customers. This partnership therefore offers us additional opportunities for market penetration and customer acquisition. It also includes cooperation in the refinancing of new business, which will enable us to grow further in Italy and diversify our funding mix. Now, I would like to take a look with you at how we are financing our current and future business. Refinancing is of central importance to our business as a financial services provider. Particularly noteworthy in this context is last year's successful issue of 2 benchmark bonds, each with a volume of 500 million euros. After placing such a large bond on the capital market for the first time in our company's history in 2023, the next important step for our refinancing was to successfully place these 2 bonds on significantly better terms than before. This means that we have now definitely arrived in the benchmark class on the bond market in 2024 and will continue to strive for further placements of this magnitude in the future. However, it is not only our bonds that are contributing to our further increase in refinancing volume. We continue to rely on our proven 3 pillars of refinancing, which we can deploy as needed to finance further growth. The 3 pillars comprise issuing bonds on the capital market, but also the deposit business of our in-house grenke bank and ABCP programs secured by lease receivables. As part of our refinancing strategy, we regularly make use of this broad range of financing options in order to be able to react at any time to changing market conditions and secure the financing of our growth. Ladies and gentlemen, in terms of profitability, we must also take a look at our equity development. At the time of the last AGM, our equity ratio was still at 19.1%, and as my colleague Dr. Hirsch already explained to you at the time, this figure was higher than necessary for our business due to the continuous restart of our new business between 2020 and 2023. This is also clearly reflected in the development of our total assets over the past few years, which have been rising again since 2023. Both the repurchased shares and the strong growth in new business have contributed to our equity ratio reaching a reasonable level of around 16%. We feel comfortable at this level or even slightly below it. Firstly, because it secures our credit ratings with sufficient buffers, and secondly, because it will also be reflected in a stronger return on equity in the medium term. Finally, I would like to comment on the completed share buyback program and our proposal for a new authorization to buy back shares. As approved by the 2020 Annual General Meeting, we launched a share buyback program in the 2024 financial year. Under this program, a total of around 2.3 million shares were repurchased in 2024 at a purchase price of around 55.4 million euros. This corresponded to the total authorized volume of 4.98% of the outstanding shares. And at this point in time, we have not yet decided on the final use of the repurchased shares. For you, our shareholders, this program means that the total number of shares entitled to dividends has been reduced. As a result, the 25% of consolidated net income that we regularly recommend for distribution will be distributed among fewer shares. I would now like to briefly move on to a technical point that I would like to read out. At the Annual General Meeting of grenke AG on 6th of August 2020, the company was authorized in accordance with Section 71, Paragraph 1, Number 8 of the German Stock Corporation Act to acquire treasury shares for any permissible purpose and to use the shares thus acquired for the purposes specified in detail in the aforementioned resolution of the AGM. On the 6th of February 24, the Board of Directors, with the approval of the Supervisory Board, resolved to acquire shares for all legally permissible purposes at a total purchase price of up to 70 million euros, but no more than 2,317,695 shares via the stock exchange. This enables the company, amongst other things, to use the shares as a means of payment for acquisitions, to redeem them, or to use them as incentives within the framework of an employee stock purchase plan. The buyback was carried out in the period from the 12th of February to the 30th of September 2024. During the aforementioned period, a total of 2,317,695 shares in the company were acquired, with a proportionate share in the share capital of 2,317,695 euros, corresponding to 5% of the share capital of grenke AG at the time of the resolution authorizing the buyback, and 4.98% of the current share capital of grenke AG, for a total purchase price of 55,438,253 euros and 8 cents, or an average price of approximately 23 euros and 92 cents per share. Specific data and acquisition volumes can be found on the grenke AG website in the Investors section under the heading Shares and then under Share Buyback Program. Ladies and gentlemen, this year we would like to propose the renewal of the authorization for a share buyback program under agenda item 10. The authorization shall be limited until the 6th of May 2030 and entitle us to acquire up to 10% of the shares outstanding. These 10% include the 4.98% already acquired. With your approval, we will thus gain the strategic option of targeted capital management, which, all other things being equal, will ultimately lead to an increase in earnings per share. In doing so, we are acting entirely in your interests. In addition, the renewed authorization allows the repurchased shares to be used for all legally permitted purposes, including employee shares or long-term management incentives. And this is also reflected in the new remuneration system, which provides for greater management participation in the company in the form of shares, and thus an even more effective alignment of interests between management and shareholders. Ladies and gentlemen, thank you for your attention. I look forward to having a discussion with you.